Hello, hello. So when I first saw that article, I had to check the date on my calendar just to verify that it's not April Fool's Day. Because what I'm reading here is that the giant pension exited Alibaba and bought Coinbase, Lucid, and Rivian stock. And this pension actually gives you lessons on how not to trade for your pension and what not to buy really for your pension. And I'm gonna explain why that is. And this is very stupid from a pension to actually buy such stocks and sell out of Alibaba really. And what is the point here? So when you are having your pension and when you are talking about getting some money back in your old years, the first thing that you need from in your investments is one thing, and that is stability. You want to be buying boring investments, not investments that can potentially 5x or 6x or 0x. Because when you're buying these kinds of investments, you have a lot of risk too. And pension seems to have forgotten that. But let's take a look at the article here before we examine the stocks in detail using our tool. So, what the article says here is that the state of New Jersey Common Pension Fund D is what it is, this kind of fund, which is the pension's largest fund, by the way, in terms of assets. It actually initiated investments in Coinbase, Lucid Group, and Rivian, while exiting Chinese internet giant Alibaba. And you will see here that the fund bought 23,000 shares about of Coinbase, and in the meantime, Coinbase has really dropped, and basically also bought EV makers, and both Rivian and Lucid are EV makers, and EV makers are some of the companies that are notorious for low margins because they are car companies, and the reason why they are very popular these days is just that hype. The problem is not every EV maker is going to be Tesla eventually. And even if they are, they tend to be massively overpriced, and at some point into the future, there will be a correction. And the problem is if you are holding a pension fund, you are holding this for like 30 years, 40 years. So what is the possibility that no significant correction will ever happen in Rivian or Lucid in the next 30 years? I think that possibility is almost 100% that something will happen to these companies, unless they somehow become extremely massive worldwidely, and they keep selling a lot and somehow increase their margins. I mean, this is extremely risky for a pension fund again, and they need to be getting stocks and companies that are not volatile, right? This is the most important thing for a pension fund. Again, you want boring stuff. You want like the McDonald's, things of that sort, the Walmarts, companies that are actually building their balance sheets without much volatility, Costco, companies of that sort, to hold for like 30 or 40 years. You don't want companies that are not making money today and buy thousands of those to hold them for 30 years, because they can go to zero. I mean, they could. And that doesn't mean that they will, but they could. So, as you can understand, shares of EV makers have been on the retreat, of course, because they were massively overvalued, and Lucid has dropped 32%, for example, so far, and Rivian has dropped 43% so far. And so it looks like this pension fund just bought Rivian because what, like Amazon bought it? This is so stupid, I mean, I don't understand. And so the pension bought actually 245,000 shares of Lucid and 104,000 shares of Rivian. Like I would be scared to buy 10 of those, to tell you the truth. So, what's going on here with these kinds of with assets? And they also sold, as you can see, Alibaba, just because it was down. And this is not how you should be looking at investments. And they are becoming a victim of the narrative. And that's definitely not how you're supposed to trade. So they actually they even sold all of their Alibaba ADRs, which is Alibaba's shares really, wrapped for the US market is what an ADR is. They sold 32,000 of those almost. Absolutely insane. And let's take a look at what they bought here. So they bought Coinbase. So Coinbase has dropped a lot, and they obviously bought it because it has dropped. But the company has a $42 billion market cap, and it's let's take a look at the balance sheet of the company. Actually, no, let's take a look at the cash flow of the company. It's much more important here. And you will see that the company is making significant cash flow, but it was making significant cash flow when the stock markets were ripping, the crypto markets were ripping, and everybody was buying crypto. Because right now, pretty much nobody is buying crypto, and this is a very, very cyclical market, as you can understand. There seem to be periods where people are buying a lot, and then periods where pretty much every crypto dies down. And Coinbase has been making some money, and you can tell that they do have some free cash flow here to support that. And so out of these three picks that they made, it's obviously the much, much better one. And I would myself potentially even think myself of adding a little bit of Coinbase to my portfolio, but not my pension. That's extremely important. You can't be adding something in your pension that could potentially even go extinct in the next 30 years. Because you don't know what's going to happen with crypto in 30 years from now. For some reason, just to gain control of currency, governments could potentially even ban crypto. Who knows? This is 30 years from now when we're talking about a pension. And so this is very, very irresponsible for a pension fund to be buying Coinbase here, especially so much of it. And, this doesn't make a lot of sense to me. And it can actually really, really backfire for the pension. Now let's take a look at even worse purchases, way worse purchases here for the pension fund. You'll notice Rivian here, which was actually down 10%. It has a market cap of $52 billion. And so with that market cap, let's see how much money they're making. $52 billion, right? Let's see what they did in terms of free cash flow. Negative, everything negative. Lost 3.5 billion. So how do you invest into that? How do you invest in that as a pension fund? This can go to zero. There is a chance that this can go to zero. You don't know what's going to happen in 30 years for this company. Is already having quite some debt here, and no profitability. It's in the negative. So I don't understand what you could be thinking to actually buy Rivian here as a pension fund again. That's very, very important. What about Lucid? Is the other company that they bought. Another EV, by the way. They don't even diversify. They just buy companies from the same industry, which is one of the worst industries to buy as a pension fund, really. And another stock that has been beaten down massively with 1.6 billion shares outstanding. And what's going on with this one? Let's again take a look at how much money they're making here. Lucid Group. So Lucid Group is at $42 billion, losing money, 300 million, 1 billion, 1.3 billion. What about the debt? At least they don't have debt. Why they don't have debt? Probably because of stockholders. We can take a quick look at the balance sheet here, and additional paid in capital, 9.8 billions is money that they pocketed from selling stock, from issuing and selling shares to investors. And investors actually included this pension fund in this case. So you see how ludicrous that is, right? I mean, I can understand it as an investor who is feeling risky and is kind of a riskier investor and wants to balance some of their portfolio in terms of hype and some of their portfolio in terms of stability. I could understand that, or maybe they're being a trader and they want to hold the company for a few weeks or so. But as a pension fund, this is very, very irresponsible. You can't be buying these kinds of companies. They can go to zero. Again, this doesn't mean that they will go to zero, but they're extremely risky investments. These companies don't make money. You'll see here, they don't make money. So how do you actually buy hundreds of thousands of shares for your pension? I mean, I have no words. Let me know what you think with a comment below. And if you did like this video, please like it and subscribe. I'd love to see you around. And you can also join our Discord channel. You can find a link in the description box below. And in the meantime, take a look at this video that I made earlier. And it's about Alibaba again. And we want to know how Alibaba is doing because people are very interested, and it makes sense. Alibaba is at a good price, and I have made a lot of videos explaining how good it is in terms of financials. Very important. So you can watch this one to get some more details about how Alibaba is doing financially, and you will be surprised how much better it is than companies like Lucid or Rivian. So thank you for watching, and I'll see you soon. Bye bye.